Hey guys, welcome back. We had a good day in the market. Ding ding ding. Closing bell just happened. It's 4 o'clock on Thursday. We had big swings. Yesterday we were up, I don't know, 3,500. Didn't take really any profits. I should have taken some in hindsight. Tilray, I think people were probably taking profits on it today. So I think that's the reason for the sell-off. GME had this bump just now on some volume, so I don't know. I'm curious to see what this will do after hours. We do still have a credit spread on it, so this has got to stay above 45 for our credit spread to work out, us to keep the credit. I bought a bunch of calls, not a bunch, but I bought some. So here's a credit spread. It's a lot less than I thought. It's $160 if GME stays above 45 by tomorrow close. Risk of $640 if it goes below that. It's pretty volatile though. I mean, you never know, but I thought it had pretty strong support at that range. So, and then today, just thinking if it squeezes next week, I bought some calls since GME has been so flat for days. I mean, relatively flat for how GME has been. The option premiums have really lost value. This is 3 days where it's pretty much flat. I had this bump, but that was just a bull trap. I don't know. Technical analysis, call suite, I don't know what that was, but really since the 4th, like kind of the 5th, it does have spikes, but it's been relatively flat throughout. I mean, this is a big swing typically, but for GME it's not. So last 3 days, this has just killed the options premium. So that's why I bought calls, kind of a little YOLO. I went through and found, I got them for next week, these call options. Went through and I kind of found ones that were cheap, and you can kind of see that on here. So you have last price, bid and ask, and then when there's big spreads and it's super far out of the money, sometimes you can get in ones that are cheaper. So I found like ones that were, I'll give you an example right here. Let's see. So look, here you go. Here's kind of a little example. This one, last price was 38, and so was this one. But this one, it should be more valuable because it's closer to the money. Then you look at the bid and ask, 56, 54. So you could maybe get this one for, the same price you get this one for. So I kind of went through and just pick and chose a couple different ones here. This one's last price was 35. The bid on it's 46. Look at this. See, the bid on that, or the ask on this one's 40. So you know you could get one for 40. Then the ask for this one's 43, and the ask for this one's 40. So it's kind of like snaking the options chain. Then this one's 49 was the ask. So you typically can always get it for the ask. 44 for this one. And you can also look at the last price. So I just went through and kind of picked out a few of them. And what I came up with was, so I started with 720. I didn't do a whole lot of work. I got 6 for 720, which, yeah, it's way up there. And I wish I kind of cherry picked it more the first time, but the 720, yeah, see, look, 20 cents for that one, but I spent 27 cents, been way closer to the money. Yeah, anyways, so I got 6 for 720 expiring next Friday. I got 2 for 400 strike expiring next Friday. And then I got 1 for 350 expiring next Friday. So kind of scattered them out a little bit. We still have 10 shares in this account, down 2,700 on that. And then we got this credit spread on GME. So by Friday, I'm hoping GME at least closes above 45. And my best wishes are that it squeezes up to 1,000. See what happens. Did have this bump late hours, but at the end of the day, this stock is still crazy. It might trade sideways for a bit longer. I think it's low enough now that it kind of found a good support, found a base. If you look back here, it kind of had a support in this range a little bit. Let's see, where is it? Yeah, so it had this range for a while, 4 or 5 days. So I think we're kind of just in that same range. It's found support here, and we're not selling. So we'll see. We'll kind of wait for a news catalyst at this point, I think, and go from there. The short float interest kind of goes all over the place, depending on synthetic shares, this or that. Could be false, could be this. Invis says it's 42%. I don't know if this is. I think this is including probably counterfeit shares or synthetic shares. And if you dive too far deep into this, and I have a little bit, it gets crazy, and it's like I'm not. It just gets discouraging, honestly. So, because it just seems like everything's cheated and manipulated. Because then you look into the dark pool of trading off the market, and not even so it's not even showing up here. Where this hedge fund says that hedge fund you want 10 million shares or whatever, and they say okay, and they just do the whole transaction off market, where it's not even reflecting on here because they're doing it. They're doing it in a back alley cafe, more or less. So squeeze, yeah, could still happen. Tilray, I do believe. See, so this is updated. This fin visit must be updated but given this is trailing. Well, no, it's not, because this used to say 127%. So I think this updated on the 10th. And we're looking at Tilray, and it says 46%. So trust this or not, Tilray's at 46%, and you think, oh, this, okay, so you see this crazy thing right here. This must have been the squeeze from the 46%. However, Tilray had a squeeze back after it IPO'd. It went up to $300 a share, and that was only shorted about 30%, 25 to 30% from what I read, was the short float interest at that time. So to me, if this is over 40%, close to 50% short float, this should squeeze much higher if they're actually covering. I think a lot of this run is not from shorts covering. I think it was just all the hype, new legislation, Biden presidency, his, all that. All the stocks are going up, and merging with AFIA or AFA, whatever it is, the other weed stock, and then good news about selling in UK. All these different things, all these different catalysts. All the marijuana stocks been running, as you guys know. And playing with that, I was assuming that great news would also cause these shorts to cover. And I don't think that's over. I know it had a huge sell-off today, and that actually doesn't bother me. I was kind of an idiot with it, though, because I bought back in. So I'll tell you what I did. Right here, we're up like 100% on it. Started selling off pre-market, and I saw that. Typically, I don't trade pre-market just because that's not a good reflection because there's no volume. Sold off a bunch pre-market, and then oftentimes when it does that, it'll bounce right when the market opens, just on real volume. It didn't do that, so I was like, okay, this is an actual sell-off. I'm just swing trading this one. So I actually sold out right here, and I should have taken more profits in hindsight, of course. Up here, I could have sold 10 shares because I had 63 shares. I could have sold 10 or 20 up here. But whatever, I sold up here, made a good profit, and then my biggest mistake though was buying back in here. I was getting excited. I was like, all right, this thing's gonna squeeze now, and I know better. I need to trust my technical analysis, trust my indicators, and this was setting up a bear flag, but I didn't really care. This bear flag right here. Bought back in. It's okay. I'm holding this now. Might be holding it for a while. However, if this stays high and there's any more positive news, I think this thing's still pretty heavily shorted, and this to me is not the squeeze. If it's squeezed to 300 on 20 something percent, they have not covered. So, and then you even look at like the Volkswagen squeeze, that was 30% or something, and that thing went to like $1,000 a share. Given these are all different situations, scenarios, it's my same belief with GameStop. They're totally different. GameStop, I think, had a much higher float shorted. It says it's only 40 something percent now. I don't know, counting this, counting that, how deep you want to go. That's still plenty for a short squeeze. And given this came out just now, and we've already seen this. So this doesn't seem like this was the squeeze. However, some could have been covered here because maybe the number is lower. Maybe it's not 120% more. Some people say it's more than that now. But at any rate, I don't think this covered all of it, and I don't think that I think that maybe there's less short or shares shorted at this point, but still plenty for a proper squeeze. So yeah, that's it for those two basically. So Tilray we're down on. I got 24 more shares here. Might be holding that a while, like I said, just like GameStop. I'm curious to see what happens tomorrow though with options contracts expiring. We got AYRO and CPSH. I picked up AYRO the other day. I think I told you guys about that. It's down a little bit. I'm still bullish on it. CPSH, pick this up. Looks like it's in a good spot. It's been consolidating for a bit. I've swung trade this one a couple times before. It's been consolidating. I think it should be bouncing off the 180th soon, and then there could be good upcoming news catalyst for this one, with NASA and just all this hype around space and that sort of thing. So this is aerospace defense. They do all sorts of stuff, honestly. Long term today, we're down a little bit. Let's see, what was the thing that brought us down today? Oh, well, Rocket, we were up on Rocket calls were up, and then Rocket kind of came back down. Market kind of sold off a little bit today, actually, overall, I think. Veery's down today. On E-Trade, yes, we have the ACB calls also. They're kind of moving in conjunction with Tilray, although ACB, according to FinViz, is not nearly as shorted, so I don't have the same thesis as it's being short squeezed. I think this is just running up on all the things that this is running up on, and that's why I don't think this was a short that was covered. Because what was this, and what was Sundial, and what was all of those didn't have the same short interest according to FinViz. This one's only got 20%. Sundial's super low, 16%. So yeah, I have one naked call on it still, and I legged into this other one. So basically, I bought 2 calls initially, $22 strike, buying on Friday. Bought these a while ago. They were up 151%. At one point, they were up like 500%, but I just waited too long. Legged into this one, so basically sold a call $2 above this one. So I'm able to sell a call because I have a call. You can't just sell naked calls unless you have crazy margin requirements, basically. But I sold the call here because I have that call, and now the credit I received for this call that I sold was $66. So that covered my whole play. So now this play was free because this originally cost me like 50 something dollars. And then if ACB goes past 24 by expiration, I can close this out for a max gain of 200, not 237, but 200. I guess the 37 is maybe because that's the difference in, okay, not to confuse you guys, but basically, yeah, you can close it between the strikes. So, and then this one's naked, so this one has infinite upside potential. And then what else did we do today? Our Airbnb covered call. Yeah, Airbnb shot up, which is good because we have the shares of it. We have 100 shares, but we have a covered call. So I'm going to have to be rolling that over tomorrow probably, unless Airbnb comes down below 205, which I don't think it will. Pretty big sell-off. So I'll be rolling that one up tomorrow. Corsair. Yeah, earnings kind of crushed us on that. Thankfully, we covered it. We legged into it early, and so we made a little bit on it. We didn't make the 10 Gs or whatever I was wanting to make on it. I don't know what we've made on it so far, but we've got 6 of these debit spreads now at this point, and then 2 naked calls. As you see here, it shows the difference. The naked calls lost a lot more value because I didn't sell calls to it. So I'm negative on the naked calls now, but these debit spreads, I'm still positive 200. And then so the Tilray, yeah, we've got the credit spreads. This one's probably going to expire worthless. Tilray's got to close above 60 tomorrow. So it's at 30 now. That'd be a pretty big move. If it does that, then we'll be good on this one. Otherwise, yeah, this one's going to kind of hurt. This is a $510 loss. So kind of lost on that one. This was, yeah. And then we've got these 2 debit spreads now because I legged into it. So those I should be able to close pretty soon. If Tilray stays above 30 next few days. It's actually getting pretty low. Dang it. The stupid thing, I was trying to close it here. I was out of town, and then I could have closed it here for max gain, I bet, almost certainly. But I guess I could close it now. It's just not max gain 5. It's close. This one max gain is 800. This one max gain is 500. So they're close. I could close them tomorrow. We'll see. That thing might still squeeze. I got ACIC shares. This is what is this one? Is this Archer? No. Yeah, this is the merger with Archer, which is the electric vertical takeoff and landing aircraft. Kind of cool. It plays into the EV hype, well as kind of aircraft and last mile delivery type stuff. Then I went over the GME calls we bought and the credit spread. And then we've got those rocket calls that got kind of crushed today. I think Yeah, Ruger went up a little bit today. These are all kind of just slowly dying. They've got till next Friday. We'll see. XL might have a huge bump. X probably not. But yeah, now we're down today on the account. Could have locked into profits yesterday. After hours didn't. So yeah, that's the way it goes. This thing was at like 81, 8200 yesterday after hours, and now we're back down to 6,000. So that's the way it works. Scale in, scale out is a good way to play it. Yeah, trust your instincts and be confident in your plays. And I had something else for you guys, but no, that's it, I guess. Thanks so much for watching, guys. Make sure to follow me on Twitter. I was updating that a lot with when I'm buying stuff, when I'm selling stuff. You know, that's definitely not a recommendation, and even if it was, it would be poor to follow it because clearly I'm not the best trader. There's definitely times I take losses, but if you're holding shares, you don't take losses till you sell them, so that's what's nice. Option contracts, you take losses right when you buy them. You just have to accept that right when you buy an option, you basically just accept it at that point that you're giving that money away. Maybe it'll work out, but since they expire, that's kind of how you have to look at it when you're buying options. So shares, though, not quite as bad, but yeah, you might want to. You could be back holding for a while. I've held shares for years and years and years to finally take a huge loss because it never came back. That happens. Make sure to sub up, like up, comment down. Happy money sticks around, and we will see you on, well, tomorrow, unless something else, some other news comes out on GameStop or something. It was doing after hours. It's kind of setting up. I mean, this has got a pretty solid floor here in this range, so we'll see what happens. All right, thanks, guys. Peace out.